Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for July 1st, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 436. My name is David Cosmeter. I'm the creator of TimingResearch.com, and you should be seeing my screen right now. Also today, I've arranged for Sonny Harris to join us again, as well as Dave Landry. And Jim, the option professor, is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, thanks, David, and thanks everybody for being here today. We're going to go through the markets here and see what it looks like based on what our guys think. Right now, we've got Dave Landry and Sonny Harris. Before we get started, let's introduce ourselves. Sonny, why don't you go first? A little background on yourself and what's going on at Money Mentor right now.
Thank you, Jim. I'm Sonny Harris, a mathematician, programmer, and trader. Trader foremost. No, maybe mathematician foremost. But I have the moneymentor.com, which I've had on the web since 1995. And I trade the E-mini primarily and also stocks on a much longer term basis. I trade my E-mini on a 5-minute, which means long term to me is days to weeks. So,
and of course, you've got the Sonny bands that you're going to talk about later on, right?
I absolutely do. Everything I do is with those Sonny bands.
That's very unique perspective there. And here's a guy we haven't seen nearly enough. This is Dave Landry of DaveLandry.com, and he's got his own perspective. So the beauty of today's show, we'll look at a couple of different ways to view the markets and hopefully give you some good insights. Hey, Dave, a little background on yourself and what's going on at DaveLandry.com.
All right. Thank you, Jim. Glad to be here once again. Thanks to you for hosting, and thanks to Dave Cosmeter for having me back. I believe in keeping things simple. In fact, in the industry, I'm known as Trend Following Moron. My Twitter handle is T Following Moron. It's the market's either in an uptrend, a downtrend, or sideways, and I firmly believe that. And I've gone through the Grail hunts 20-something years ago, and I've determined that the best thing to do is just draw an arrow on the chart. And Linda Rasky once said, if you're not sure which way a market is headed, ask a 6-year-old kid. And I said that so many times in presentations that people think that I said it, but no, that's Linda Rasky. I also believe you can only look so far out. I'm slotted as a swing trader, but we will hold positions as long as they move in our favor. We had one that just stopped out that we were in almost 1 year. We go in for a swing trade, we take partial profits, and then we trail a stop higher with that's the money management. We trail a stop higher by letting that stop gradually loosen over time. So I believe, again, in keeping things simple. You can only predict the short term, but you can stick around through proper money management longer term.
Yeah, and we've had a fantastic trend since the lows of October. A couple of burps in the road, but generally it's been on Northern Highway pretty much the entire time. So this is the kind of environment that you can really make a lot of money if you follow the trend because the trend's been pretty consistent.
Absolutely. I have a little system. If we have time, I'll show you later, that got long way back in February in the queues, and I'm shocked myself at how well it's done since. Just a simple little trend following system.
Yeah, and these periods where you get a big run is a heck of a time. Yeah.
If either of you want to take over screen sharing at any point during the show, just let me know.
Well, we're going to start out with Sonny because it's ladies first, right, Dave?
Yeah, it sounds good to me.
Thank you, gentlemen.
So, Sonny, you start sharing your screen, and let's start hitting some of these things and see what's going on. We'll start out with the stock market and the S&P.
There we go. Here we go. He allowed me.
And we can figure it out. I guess one of the big questions here is obviously everything's gone extremely well, and people who've been in it, like Dave, with the long-term trends have made a lot of money. The question is, between now and the end of the year, is there a possibility of a bump in the road? Is there any signs that a bump might be happening? The only thing I could even see would be a little divergence in RSI, but nothing to write home about. But we'll touch base on not only what's going on and what it looks like it might be doing relatively short term, but what's the risk of a bump in the road happening as far as anything you guys are looking at. So let's start out with the S&P right now and get an idea of where you think support, resistance, and the trend and everything.
I've got support right at this DMA, the gold and purple lines in the center of the Sonny bands. That's the dynamic moving average. Price has dropped down to it. This is the bump in the road, I think. And I really don't think it's going to go much farther down than that. I think we're going to come on up from it. Bounce and go up.
And the middle of the road that we're testing right now is around what, 54.92, does it look like?
96
50,
says.
54.96. And if they open the trap door a little bit, you think maybe 53.50 or
45, I think that's it.
54.45 would be the first stop.
And the bottom sunny band is 54.20.
Yeah.
So it could go that deep, and then that would put it at this attractor where you see all this congestion at this level.
Yeah.
So if it goes down, it's going to go down to there, but I really don't think it's going to go beyond there.
Now on the red gold you've got there, the red is indicating a little bit of danger, or what does that mean?
Yeah, that means that gold is on top on the histogram, but that it's starting to get closer and closer together. And as that happens, it usually turns and goes negative. And when it goes negative, we're definitely looking at down moves. But you see
And
how
on the
track here, it bounced all along the zero line, red and go,
Mhm.
red and go, red and go, telling us it was worried about it going up, but it still went up to here.
Mhm.
So that's the same thing that's happening right now. It's going red and gold again. So
Yeah.
that speaks to the little bump in the road right in here.
Yeah, it's still in the middle of the street though.
Yep.
Yeah. With regards to one thing that I saw in my stuff was that the market seemed to be running out a little bit of a steam on momentum. And then last week they said for about 5 days, the divergence between the S&P 500 index and the breadth in the market was the biggest divergence since the late 90s, which
Oh,
again
good.
would add to the markets running out of steam theory.
Yeah.
If it is, and that all it is right now is a theory. This squiggly lines you got underneath, is that a relative strain type thing that clearly looks like it's had some trouble 2 times and rolled over?
No, this is the slope of the DMA. So I'm looking at the degree that this gold and purple line, I'm looking at the degree at which they rise or fall.
Mhm.
So as long as it's above the blue zero line, it means it's rising until it turns
Okay.
red, and then it's rising, but it's coming back down. So it's still above zero, still positive slope. When we
I
get
got you.
down here, we've got negative slope, which means the market's moving down.
I got you. So for that to go into negative territory, you got to cross the blue line, which you're not doing yet.
Right.
I'm with you.
I think it's
I
going to
got you.
bounce like this does. I think it's going to come down to the blue line and bounce.
How about we look at a couple other different things? Like we've got the S&P there. What about something like crude oil? I think that's CL, isn't it?
Mm-hmm.
But that seems like it's getting ready to pop, or it's gaining momentum for sure, right?
Yeah, it's just been going up and up and up. And the strange thing is the price of gasoline in my neighborhood is going down.
Yeah. Yeah, that could be refinery stuff or other
Yeah.
stuff. Yeah. Also, the price was going down before, so maybe that's the inventory they picked up cheap or something like that. Who knows? Right?
Maybe, yeah.
But clearly, the current prices are definitely pressing to the upside a little bit. But there is a resistance number there, and where is that green line kind of come in? Right around where we are now.
I think we're gonna go on up to 36. Well, 36. No, 86. I'm sorry. I
Yeah,
think we're gonna go up to where this yellow dot is.
that will be the big test.
86. Yeah. And I
Yeah.
think we're gonna reach that. See, there's a lot of price action over in that on the left in that same area.
Yeah.
And the blue vertical lines and the red vertical lines, those are my buy and sell points. So red is a short and blue is a long.
Yeah, on the option side, Occidental Petroleum I've been involved in, and it's the calls are really picking up for me pretty nice. So
Are they?
it's clearly following up with the price. So if we go up to 86, I will not be unhappy because I think Oxy will probably follow it up.
Mm-hmm. Mm-hmm.
What about the yellow metal, also known as gold?
Yeah, it's not doing so much.
Yeah, that's kind of a slug right now, but
It'll pick up again. I'm confident.
yeah. So you think it's holding the net down there?
I do.
Yeah, you don't think they'll open the trap door and
Well,
drop
I
to
mean,
2250?
it always could.
Yeah, of course.
And 2250 is the level that it would drop to.
Yeah.
If it drops to there, I'm going to go buy some more.
Yeah, my feeling was you got to get above 2380, and then of course, then the horse could get out of the barn. But if you can't get above 2380, the horses are pretty much stuck in there. What do you think about that?
I think they're stuck and kicking.
Yeah, they're kicking. Yeah.
Yeah,
But they certainly need to get it through that. I think 2380 is a pretty decent number.
it is. So
So
the purple is on top in the DMA moving average.
yeah,
So the purple and gold, purple's on top, which means we're bearish.
yeah.
And we've got green and purple down here below the zero line on the histogram.
Hmm.
So I think it could get a little steeper going down. I think and slope is approaching zero, so it's flat. When the slope of the DMA is flat, that says to me, do nothing. Sit in cash as long as that thing's flat.
Now, I know you also watch the tech sector quite a bit, so you want to put QQQ up there just so people can get an idea of what those mega cap large tech look like, because they're probably pretty similar to S&P. That's why I thought S&P would give you most of that idea.
They are similar. Looks
But
like it's a little bit stronger though.
a little bit more on the verge there of maybe turning
Mhm.
that one line underneath the zero line, though, huh?
Yeah, it's
Or holding.
definitely working on it. And it could do this again, like this is the same as the one we just looked at.
Hmm.
It could go smaller and smaller and smaller and still be going up. But as long as it's above the gold line, you see how it stays above the gold line that whole time?
Hmm.
That's one long trade from there to there.
And what about the interest rate market? If we put up TLT, that's a proxy for the rate market. And
Well,
yeah, I think if that goes down, rates are going up. Yeah, I think that's it, right? If this goes down, rates go up. So what does it look like rates are doing? Because the 10-year yield popped from 420 to 440 here, before you could spell TLT. So I don't know.
Now, this
You
looks
see,
like a sidewinder to me. It's just going up and down and up and down and up and down all along there.
yeah,
So, the next goal is, let me draw that horizontal line real quick. The next goal is right here. You see price hits it a lot back in this area, then it
yeah.
comes and tests it again and then fails. So
But
this
isn't it kind of holding on for dear life on that green line at the bottom right now?
right here, yeah, it sure is.
And isn't your other indicator that has to get under zero, getting under zero?
It's about to go, isn't it? Look how short this little red bar
Yeah.
is. So it's about to go down.
Because if I think more people start yelling, the Fed has to cut, the Fed has to cut. I mean, I'm going to get a headache.
Yeah, I kind of don't think they're going to.
Yeah, it doesn't look like from this that they're betting that way right this second.
Yeah.
What about the you want to take a look at the U.S. dollar DXY? Because we've got a big yield advantage, and that's been kind of helpful to us.
Mm-hmm.
Our interest rates are way higher than Europe and Asia.
DXY dollar.
I think it's dollar index, isn't it? DXY or
E
uh,
Y is
DXY.
not in. See,
Yeah, I don't know what it is on the futures. You're watching futures and stocks, aren't you?
I do, yes. Do you
Yeah.
have
How about the
ETF?
price of how about the price of soybeans? They're way out of favor down here at $11. And it is summertime, and the weather, I guess there's 22 named storms going to be hitting the world this season.
Oh,
So if weather didn't work out so well, is there any? Obviously, it's still on the defensive, but it's
oh,
certainly at a lower price, right?
yeah, we're looking, let's get the horizontal line tool, and we're looking for it right there.
So you think it could be going down towards 10 and 3/4?
Low back in
Yeah,
August, a year ago. This is
yeah.
a year ago. And then we're here now, and we have to come down and test that.
If it can hold the green line though, as it did back in April of and in February, that was two areas where it did bounce out of, huh?
Mm-hmm. And we've got another right there, another level, and right at this yellow dot, another level. So, I mean, it
Yeah.
could be over now, but I do think it's going to go a little farther down.
Yeah, it's right now it's a little catching a falling knife, huh?
Yeah. And
What about let's take a stab at a couple of stocks, Apple, AAPL, because there's a big talk about how they're going to get a big reload after September, and of course it had a bit up time here. Is it?
what does a big reload mean?
Well, the iPhones are going to have to reload it to take in the AI they're putting out because only iOS 15 and i15 Max can handle it. So obviously, an upgrade cycle on laptops and handhelds, would be very good for them.
Christmas presents.
Yeah, there you go. More revenues, more better, right?
That's right. And I think they're doing quite well. I mean, we've got a nice big blue bar here today. I think it's Apple's one of my holdings. I think it's ready for some more move upward.
Yeah, it's an interesting one. And what about the darling NVIDIA that seemed to run out of steam around 140? But what does it look like nowadays?
Yeah, it's down here below the flat DMA now. I said right in the beginning, I sold up here on this bar, sold my shares in it because I want to buy back lower. And I think it's going to come down to the lower inner band, which is right here. Green was the lower outer band. This is the lower inner band. And it's at 117.71.
Another sector that's picking up some bids is the financials. They just got a clear bill of health from the Fed, and they're announced buybacks and they announced dividend hikes. What about J.P. Morgan and Bank of America, JPM and BAC?
Yeah, I was just looking at JP Morgan earlier today. It looks like a good bet to me.
Yeah.
We've got.
And they're going to have earnings next Friday, so they're going to tell you how much money they're making off of people leaving their money in a non-interest bearing account and other ways they make money, right? So and the credit card debt being at $1 trillion something at 20%, that's got to be a good business too.
You'd think so. And this is a pennant formation. You see how it goes, and it broke out of it today. So that's another positive sign.
Bank of America, BAC, same story, different headline. And doesn't have quite the legs of the other, huh?
It doesn't, does it? And it has the same kind of formation that the ES had, where it's come down and it's got little bitty bars trying to go up, but they're not getting anywhere yet.
Well, one of their problems is they have a ton of mortgages at 2.5% and 3%, and they're on the books, but I don't think they actually have to go mark to the market on them. But I think people know that those loans are under water because, 7% yield on stuff you sold for 3% or 2% is going to be a pretty negative deal.
That's true.
So, any other stocks you want to take a quick hit at before we roll over to Dave and get his ideas?
Go to Tesla for a second.
Sure.
Finally, we got a love movement there.
Yeah, that's got a lot of steam going, but it's running right into your yellow line pretty good.
Well, the yellow line in this case is the extension. The blue line is a linear regression line. So it approximates its own curve, if you will. This is just a line. And the yellow is 2 moves out on the bottom and the top. So you see it hit that. Typically, when it hits that, it will pull back. So what you'll see. See how it's been going up and down in this channel?
Sure.
So it's that linear regression angle, channel that's holding it in. As you know, I'm a big fan of Tesla stock.
Yes.
I don't have a Tesla car yet, but I heard yesterday on the news that there's a new car that has a range of 600 miles. Now I'm interested.
Yeah, I was right next to a fire station, and outside there was a Tesla SUV that looks like it's out of Star Wars.
Really?
And I looked in it and stuff, and it really is out of Star Wars. There's no
was it the
instruments on the dash, or
Was it the Cybertruck?
Yeah.
Yeah.
Yeah, the one that's all looking like metal and it's bulletproof and all kinds of stuff like that. It looked like something that the military would be more appropriate for, but if people can buy something that's exotic, they will. There are people like that kind of stuff.
Expensive.
Yeah, exactly. Okay, well, that gives us a good start. We're going to come back to you, but right now we're going to shoot over to Dave, who's going to explain his methodology, which has been a fantastic methodology, in particular since October because of the fabulous trends in February. And so, Dave, give us a little more insight on what you're looking at and how you go about, figuring out things. I think Dave's on mute.
Hey, Dave, you're muted, I think.
Yeah.
Okay, as I said earlier, sorry about that. I believe in keeping things simple. I do have one or two very simple indicators that I occasionally use. For the most part, though, I like to look at a blank chart first and foremost. Now, getting to those indicators, a very simple indicator that I have is called Landry Light, and you can get it from Stock Charts. I think somebody in my Facebook group has the code for it for Telechart, in case you're looking for it there. But all it does is count the number of lows that are greater than the moving average. And one of my favorite patterns is to look for the market to shoot higher and then pull back to the 30 EMA. Now, the 30 EMA is used to really do a lot of work with the 20 EMA, but now I find the 30 is just a wonderful indicator, so to speak. And I think if you didn't know anything about trading, just never buy a market that's below the 30 EMA as a general statement. That'll keep you out of a lot of trouble. If you look through a lot of these altcoins, I don't know if it's PG-13 or not, so I'm not going to say the real name of them, but if you look at the altcoins, especially right now, because they're in a bear market, most of those guys are headed lower, and most of them have lost over half of their value below that 30 EMA. But getting back to this simple little setup, the first retracement or first pullback in an IPO is a good pattern. In this case, it just so also happens to be a Landry Light pullback, and that's when you have a market that has Landry Light and then pulls back to moving average. But just to kind of give you a quick thumbnail on the methodology, this is the one I alluded to earlier. And we got in right around here, and we took profits, partial profits around here. And our stop was right around this level here. And we almost got stopped out right about here. But we were able to hold on to it, and we got stopped out about a month ago on this one. So we almost made it an entire year. So that's kind of the idea. Get it for the short term, and you should never use the word hope in this business, but hopefully stay for the longer term. Now, as another quick example, I traded NNE recently as a pattern I call a buy at B. The buy would have been right here. You're just simply buying at a 5-day closing high with a few caveats. If you go to my YouTube channel at Dave Landry, I literally uploaded a video a few minutes ago so you can learn a little bit more about this buy at B pattern. And I was able to take partial profits and subsequently got stopped out. We did go back after this one. We were able to take partial profits, trail a stop higher. Unfortunately, we did get stopped out. And the reason I'm showing you these two is ideally, I want to be in positions a long, long time. In this case, we got stopped out fairly quickly, but overall, it turned out to be a really good trade. But ideally, I want to get into something and have it gradually go up over time. That's where the real money is. These ones like this are a lot of fun if you can hang on. Bill Dunn and before him, Stanley Kroll once said that trend following is like riding a bucking bronco. And that's a really great way of putting it. Let me just show you a couple things real quick. I mentioned the system earlier. This is the TFM 10% system. And these zones, just real simple. The top of this zone is the 50-week closing high. And one of my clients pointed out that he likes to get out when the market is 5% or more away from that 50-week closing high. This system is based on a 10% or more close away from that 50-week closing high. And if you close below the 50-week simple moving average. So it's a little bit longer term system, and it's a good little way to stay on the right side of the market. So the buy signal in the Qs was right here at 319 and a half. I'm long from 319.49, just 100 shares. But to my amazement, this thing has turned into the mother of all trends, and so far, so good. So that's kind of gives you a little bit of the idea that the way I try to keep things simple when it comes to trend following. Now, one of the, you guys were talking about the market itself. The breadth is not fantastic right now, but if we go to a daily S&P, and let me just pull it up real quick, you'll see that we're not too far, obviously, from all-time highs. So this, along with the NASDAQ, now the Russell is abysmal. We'll get to that if we have time, but the S&P 500 still looks pretty good. We had this fake out on Friday, and so far it's kind of hanging in there. It has a bit of what I call a double top knockout look to it, although we haven't had the knockout yet. So the double top is just a minor little double top, and that's what we have. And that's a lot of people like to predict early and often and get bearish quickly. And what happens when you have this little double top in here, followed by a knockout move, like a short thrust lower, is that sort of sucks in the nervous anxious shorts, and it knocks out some anxious longs. And if the market goes back up, creating a trigger, these traders are left in a predicament. So as far as the weak sectors, you guys are talking about financials. If you're taking a look at like XLF, that's questionable at best for now. As a trend guy, I'm going to call a sideways trend because we're at 41 and change now, and you can go back months and we were still at 41 and change. And I call that the Rip Van Winkle test. I like to pretend you fall asleep and then wake up a few months later and you see where the market is. If it's unchanged, then it's probably in a sideways trend. So what and I hate to use the word hope, but I'm kind of hoping that some of these weaker areas begin to improve a little bit with the overall market. So as long as we stay at or near new highs, I think we're okay. And I'm going to see things more as glass half full. Now, if we begin to break down in earnest, S&P 500s, for instance, if we drop below the 30 EMA, that might be of some concern. Let's see if we can pull that up really quick. So everybody's always looking for levels. So I would pay attention to 53.80. If we got below that, I would begin to become a little bit concerned. And as like one of my clients pointed out, if we got below this 5% line here, and right now that's at 51.96, around that level. So if we drop below that, I would begin to get a little bit of concern. You can see we did dip below there not that long ago. This is a weekly chart, by the way, but then we went right back up. So it was a nice little pullback on the weekly, and so far, so good. So that's sort of my take on things. Let me just show you Bitcoin real quick, and then Jim, if you have any questions, I'd be happy to answer them. But you can see Bitcoin, you've got this downside Landry light there. Let me see if I can get a better chart on that shows this. Let's take a look at it here. So Bitcoin's been a bit of a bummer. I know everybody was excited about this halving or whatever they call it, but so far it's been a non-event. If anything, you can see we have a bit of a downtrend beginning to develop, and we now have 18 trading days. Well, I guess every day is a trading day in Bitcoin, but we now have 18 days below that 30 EMA where the highs are below it. So 18 days of downside Landry light. A little bit concerned here. If we take out 60,000-ish or the bottom of this range, I would get even more concerned. I would not be buying this market at this particular time. And right now, it seems like all the altcoins are also in a bear market based on this.
Okay, can I ask you a quick question?
Absolutely.
Hi, because this is a big thing we should be talking about today, because there's a company called, or an exchange, Mt. Gox, which went belly up a while back.
Yes.
And it was a Japanese Bitcoin exchange. And for people who don't know, they went bankrupt, but now they are going to pay back their creditors this month.
Oh, wow.
And that would also give a reason why it sold off, because obviously they're front running what could be $9 billion of Bitcoin coming on the market.
Oh,
Now,
okay.
to give you an idea, when these guys went belly up, a $25,000 worth of Bitcoin that they couldn't get to is now worth 10,000% higher, or 2.5 million. So the thought is that anybody who had 25 grand hooked up since 2014 or 2011 or whatever it was, who now has access to 2.5 million, is possibly likely to say, "Get me my money. I'm getting the heck out of there," because they're just happy to find this found money. And so if that occurs, it's going to put some pressure, or it has already put pressure on Bitcoin. But guys like Tom Lee, who's got some credibility, although he has big announcements, he thinks Bitcoin could go up to 150,000 by the end of the year, which is about a tripling. And basically a combination of money in the sideline money market, 6 trillion, Fed maybe cuts a rate or two, something to get it going, but also that supply and negativity coming off the market. So obviously, if we could look at GBTC or IBIT, if we could see if there's any reason to take a bite down here, or is it, or when they come out with more and more of this selling of the 9 billion, are we going to bust down the bottom and be able to pick this thing off the highs of 40, where it hit 40 at the high point over there? Could we go down there,
Well, one of my favorite sayings is don't confuse the issue with facts, and everything you just said is really fascinating. I had no idea that was happening, and I get a little news here and there through osmosis. So I just believe in looking at the charts. Just
Sure.
one thing real quick. I have a friend of mine years ago. he got caught in one of these debacles, and it might have been Mt. Gox, and they gave him like a 10% payout or something. But Bitcoin had already gone up like 10 times since then, and he said he probably as a trader would have dumped it, but it was like forced savings. Even though he lost 90% of his money and he gave up on everything, it came back that big. So what you're saying is fascinating. That could be a lot of supply coming onto the market. With
Temporary.
Bitcoin, and again, I don't want to confuse issue with facts. You've got 21 million max-ish. And that's enough, as I wrote in an article many, many years ago. That's enough for everybody in Florida to have one, or every other person in California to have, well, those numbers might flip, but every other person in California to have one. So there's very limited supply of Bitcoin. One problem, though, not to get too far sidetracked, is the paper Bitcoin. It's kind of like gold. I think all the gold in the world will fit in an Olympic-sized swimming pool. Don't quote me on that. It might be two, but it's a finite amount that you can wrap your head around and possibly hide in your backyard. So there's not a whole lot out there, but there's a lot of paper gold out there, all the derivatives and everything. And I think that's the same thing that's happening with Bitcoin. There's a lot of paper Bitcoin out there, and a lot of these exchanges, they question whether or not they actually bought Bitcoin with the money you gave them. And what's the old saying? Not my keys, not my coins. But anyway, as far as the technicals are concerned, right now, I think we're stuck in a sideways range at best if you're looking at the GBTC. And I wouldn't actually get involved with GBTC until unless it could get above 65. So once again, I think that the net price movement is your best, one of your best indicators. And I also think, again, that 30 EMA, notice that we're well below 30 EMA. We have been for 9 trading days.
Right.
So I would avoid it unless it got above it. And ideally, I'd like to see it break out above 65. So I think it's actually a positive thing that it went down. Should it go back up, of course. If you have like a base that breaks down and then it goes right back up and makes new highs, that'll actually test out. Not that you want to trade that directly, but that'll test out. And the reason to test out is because a lot of people got shaken out and thought that it was breaking down, and then it turns around and does just the opposite.
Yeah, that's always a good one. If they hold it here on the lows, and then they start blowing out the highs, Tom, Dick, and Harry are all caught on the wrong side, and now you've got the momentum traders, and so that's probably how you could go up to a high number that Lee's talking about.
Yeah, absolutely. And I try not to get, again, confuse issue with facts, but there's a lot of, if you listen to like Michael Saylor or somebody, he'll get you all pumped up.
Yeah,
But it'll make you wonder how come it's not $1 million dollars a coin. But again, just follow along. And right now we're going sideways at best. A little bit of improvement, obviously, today.
Yeah. And what about IBIT? Because that's also a popular one. Probably the same chart.
Yeah, it should be pretty much the same chart. All these cash ETFs or somewhat the same. I know by accident, again, I got a little news through osmosis, but a lot of them, I think GBTC is liquidating a little bit because they have some of the other people are buying IBIT and all these other different ones. But yeah, it's sort of the same action there. 4250 round numbers, or at least above 40 would be an area where I would maybe get interested again. For now, though, I would leave it alone, not try to catch this little bounce from low that we're seeing today.
Oh, another sector that I've been having a little success with short term in the last 6 months is the metals, like Newmont Mining and Freeport McMoran and XME.
Yeah, those have been really choppy as of late. We a few months ago we were interested in the golds. I forget exactly which one we were long, but you could see once again the net price movement pretty much flatten these guys for a while. Now gold could be choppy, as you know. It's a little tougher to trade than something that's a little bit more inefficient. The commodities itself can anything commodity based you'll find can as you know can be quite choppy. Let's see.
Is it above the 30% number you were talking about? That's kind of important.
The 30 EMA, yeah, but it's sideways. So we get back to Newmont. You can see,
yeah,
we're just above that's 30 EMA. But if you notice down below and again, I always look at a blank chart first, but these little indicators can sort of help you. So notice back here, you had lots and lots of green. It means many days of upside Landry light. This is one of my patterns is when you pull back to the moving average, look to get long again. So you would have, let's say, about 10 to 20 days of Landry light, and then you'd have 0 when it pulls back to the moving average. So that was one of those patterns. But what you need to watch for is when it begins to flip back and forth. So 0 means that the high or the low is intersecting the 30 EMA or whatever your favorite EMA is. You can put whatever you want in here, obviously, but this is a 30 you can see right here. But you can see when it starts flipping back and forth, you have a choppy market. Now, of course, again, just eyeball it and put a horizontal line in there. And it's like, okay, where are we now? 42. Where were we way back in April? 42, end of April. So that's a sideways market. I would leave that alone. Now, if I were long for some reason this market, maybe from this pullback back here, then a trailing stop would probably end up probably about 38 or 39, somewhere in here. And if I get stopped out, I get stopped out. So
Yeah.
I won't exit a market if you go back to like that, just real quick, not to get too far sidetracked, but if you go back to the KNF, I often do what I call a dead money report. And that's when I show markets that were long to just go sideways for a long time. We don't necessarily bail on a time stop, but we use a trailing stop to take us out. And we only trail that stop higher on a positive move. So say if you're using a moving average, that moving average will keep going up, as you know, over time, even if the market comes down. So the trailing stop only goes up if the market goes up, and it stays the same when the market goes down.
Did you have something on the XME you wanted to talk about, right?
Yeah, XAB has been all over the place. So
It was
it's
great for
really,
a while though, but then it had the pullback. Yeah.
yeah, it looked like it was going to take off. And you take a look at, let me just show you gold basis, the ETF here real quick, and we'll go back to XME. Gold
Sure.
was looking pretty good. This usually a gap after brand new highs would scare me off. I don't get too nervous about commodity related areas when they gap because they are prone to gap back and forth a little bit. But you can see we had a really, really nice trend in gold, went up and made a little bit of that minor double top, and then came back, and then now we're stuck in the sideways range. So take a look at XME. We'll go to silver too in a second, but XME selling off fairly hard. Now it's pushed up to the moving average, and once again, your net price change is virtually nil. So I would avoid that. What was the one we said we'd look at real quick? I forget
Was
already.
Freeport McMoran FCX or
FCX.
I mean, that's
Oh,
a
I
copper.
wanted to take a look at silver.
Oh,
Yeah,
that's
so
right, silver. Yeah.
yeah, so you can see Freeport is, if you draw a trend line, it's kind of beginning to drop in here, and you've got more downside Landry light and no upside Landry light since way back in the beginning of June. So almost 1 month kind of underwater, so to speak, with this 30 EMA. You had one little day where it peeped up a little bit and then
Right
again
back in the
began to
soup.
roll over a bit. It once again, it's what, 49, and go back in time a few months and it's 49. Now silver had been looking a little bit better. We did get long. I forget which stock it was. I think we were able to get partial profits, and that was about it on silver. But you can see silver ran up recently and it pulled back and then tried to go back to new highs, and then now we're kind of back in the chop soup. So I would avoid silver for now. I would avoid metals in general for now. Just nothing to get too excited about. And let me just real quick show you something that still looks okay, but check back off. But you can see the semiconductors compared to these other markets, basis the SMH. You've got lots and lots and lots of upside Landry light. Again, lows greater than moving average. Notice these orderly pullbacks in here, and so far so good. Now we did have a little bit of a fake out on Friday, but that's okay. That's a pattern I call a trend pivot pullback. And basically it's just a high surrounded by two lower highs, and that pattern will complete today. So if you were looking to buy this market overall somewhere around 268 or so above the high, this high right here, and maybe stop out around 250, we're trying to capture a short-term and a longer-term move there. So that still looks pretty good to me. And I think NVIDIA is very similar. You guys were talking about that a minute ago. We'll take a look at that. Yeah, very similar pattern. So NVIDIA would be a buy above, let's just say 129.5.
That makes sense.
Let's keep it simple, 130.
Yeah.
And then a fairly liberal stop down to about 110 would be a stop on that, or anywhere below the 30, you might want to think about exiting. But so far, I know a lot of people getting, I know Sunny got the top in that, and I don't know if she's bearish or not, but a lot of people getting bearish really quick. I think they might be right, but I think they're a little early. I think we probably have one more push higher in NVIDIA. And as you alluded to a minute ago, once you start hitting those new highs, that's when the FOMO begins to kick in. And this is especially true in something like an IPO, and that's why that buy at B pattern works. because that market is so inefficient. You don't have all these institutions and everything dumping on it. But I do think that NVIDIA still looks, check back often, but for now, I think it still looks pretty good. As long as we stay at or above that 30, then I think 130 would be a wonderful place to look to get long in NVIDIA.
How about two quick ones? Occidental Petroleum and Schlumberger. One is
Okay.
obviously a producer. The other one is a servicer. And they both have decent news.
Yeah, those are big, thick stocks. They don't tend to, plus they're being commodity related. We back the chart way out. You can see it's what I call a Jackie Mason stock. It's up, it's down, it's up, it's down. I guess that reference doesn't might be too old for some people, but
I got it.
yeah, you got it. So, but one thing, it does kind of look like electrocardiogram longer term. So as a trend guy, something like those stocks in general, I'm not going to be too interested in. But you can see for the most part, still in a downtrend, trying to wake up a little bit. But even if it does, it's going to have a little overhead supply to deal with. And in this particular case, it would actually have to make multi-year highs for me to get excited. What was the other one?
Schlumberger, SLB.
So it'd be slob. Okay. Schlumberger is probably going to be choppy too, although it can trend at times. So
they both look like they're trying to turn, but trying to turn is different than going to be able to continue, right?
Yeah, trying being the key word in that sentence. Let's take a look at the bow ties real quick. I have a pattern I call bow ties, and that's a 10 simple, 20 exponential, and 30 exponential moving average. And the proper order means 10 is greater than 20, 20 is greater than 30, and 30 is greater. 10 is greater than 20, 20 is greater than 30. And this is illustrated down below. By the way, I call these illustrators because I don't think an indicator indicates anything. It just sort of tells you what's happening in the market. And as you alluded to, it does look like it's trying to turn. You can see that 10 is almost crossed over that 30, but so far it's still in downtrend proper order. And that means that the 10, if you can look up here, is less than the 20, and the 20 is less than the 30. And as a general statement, you could use this in whatever market you want, whatever time frame you want. But like the Landry light, if a market is red like this, you don't want to be long. Now, once they flip over to the upside, then you could possibly look to get long. I would prefer, if I'm trading something commodity related, for it to be coming off of a major low as opposed to just a 1 or 2 year low like this is. So if it's going off, if it's like almost all-time low, just real quick, I'll show you the P's. So like if the S&P 500 begins to bow tie down, I would begin to get a little nervous. We did that back in late April, early May. You can see it went from uptrend proper order to downtrend, but notice it really didn't follow through to the downside. It had one little fake out bar, and that was it. Then it went back to uptrend proper order. So I would keep an eye on the S&P because at all-time highs, if you go to downtrend proper order, sometimes that could be the beginnings of the end. And this is especially true. I'll just show you real quick, and I'll throw back to you. If you take a look at a weekly chart with this, and you could see that if you go in and all your major bull and bear markets, 2007 right here, notice all the red, and then the uptrend that happened afterwards after the 2008, 2009 bottom, you could see we've had lots and lots of green on the way up. So that's something that you might want to keep an eye on too, as far as the longer term market time, to kind of help you see that forest for the trees.
Sure. Okay, Sonny, do you want to come back on with your stuff? Because I was going to have you chime in and get your opinion on the tech sector, which would be software, IGV, and the semis, SMH, and maybe your intake on the crypto, because again, July could possibly be a turning point because again, once this stuff is on the market and either sold or not sold, things could be different in the for the rest of the year.
Well, I'm kind of standoffish about that. I mean, they said that Bitcoin halving that they did.
Sonny, do you want to share your screen again?
I tried to. It said I couldn't.
You should be able to now.
Okay. You got it?
Yeah, looks good.
Okay. So
yeah, there's your software one, IGV.
Yeah, the Bitcoin halving was supposed to make big up moves in the Bitcoin market, and it didn't. And I think this thing in July is probably going to be less than dramatic as well. Although I do think that Bitcoin is going to get much more expensive. It's just not right this minute. I think.
Well, that was the whole idea. Yeah.
Yeah, I think we will better this high price at 77,000. I think we're going to go up above that, but 1, 2, 3, 4.
Do you trust this low neighborhood that we're in now, or do you think there's another floor to the downside?
I think there's another floor to the downside right here. So it's not much lower, but it's some lower.
Yeah, could be 10 grand lower.
Yeah, 58 something, 58,
Oh,
9,
5 or 10 grand lower.
960, something like that. So I think that we're still going to move down to that level and then meander going up. I think everybody's going to be worried about the fact that this went down for this long and they're going to be reluctant to get back in it.
Well, again, this guy Lee was saying there's 10 great days a year with Bitcoin, and if you're not in there for those 10, it's going to be a rough racket making money. So it might be something you just have to make a commitment to and understand that you could be early, it could be whatever. But if the long-term picture is even half as bullish as he's talking about, it's worth the rocky road, you know?
Yeah, I don't do ETHU. This is the one I trade, Ethereum.
Hmm.
And the picture's not much different, but you see it is climbing, whereas Bitcoin was going sideways.
Yeah. Yeah.
So we've got some motion coming. It's at least going to go to the purple DMA, which is right here. I guess it wicked there. So I still think that we're going to see better than, what is that, 4071? I think we're going to see better than that.
Yeah. And this has more uses from the standpoint of businesses, I guess. So that's what makes it a little more interesting. Huh?
Right.
What about that IGV you had up there? Because that looked pretty darn good. And that's the software ETF as opposed to the semiconductor. And they kind of go hand in hand in some respects, but maybe they're diverging a bit. Maybe this is a little bit stronger than the semis.
So we've got a yellow dot back here showing that high. We've got to get up to that level at least, which I think we'll do. I think we'll test that. But then chances are it's not going to go soaring out from that orange line.
Hmm.
It could, obviously, but I think we're going to hit that orange line and do a little bit of retracing before breaking through.
Yeah, because yeah.
The IGV is kind of an example of what I was saying about glass half full. I've been fairly bearish on IGV, but in more recent times, it's improved quite a bit. And you can see it's pushed through a lot of that overhead supply. So that's certainly a good thing. And we're just off all-time highs. I wouldn't rush out and buy this chart because it's wide and loose and still sideways, but it has improved as of late. And if you see more sectors like software begin to make new highs, and if the semiconductors hang in there, then I think we could definitely go higher in the overall market. And again, check back often, but if we start seeing some of these areas fail, especially the semiconductors, I think we could be in trouble. But for now, things are looking pretty good, especially with something like IGV coming back.
But a quick look at the healthcare. You got Lilly, LLY, and Novodisc, NVO, and this Ozempic, weight thing is just a real fever.
This one's just a straight line up.
Yeah.
That's nice.
Well, I mean, they're advertising it. You can lose 20% of your weight by taking this pill and then hitting Baskin Robbins afterwards, I guess.
But I talked to a nurse practitioner I was seeing the other day, and she said, I think this Ozempic thing or whatever it's called is going to go the way of FinFin did in the 90s.
I have to agree with you on that, Sonny, for sure.
Yeah. So that's a scary thing about a lot of people taking a drug that's not that well tested yet.
Yeah. And I heard, I don't know how true it is, but I heard it suppresses your dopamine, and that's why you don't want to eat as much. But if you suppress your dopamine, that'll also make you depressed. And I think a lot of these people are getting depressed. So I don't know. I think the chickens will come home to roost on that one. But again, let me just go back to being a trend following moron.
It also negates the hormones that allow you not to get pregnant while you're on birth control. It negates that effect. And so a lot of people are getting pregnant. They're getting skinny, but they're getting pregnant.
Yeah. Well, and not to beat up on Ozempic, but the faces, you lose fat in your face, which you need to look youthful. And some of these people's faces look like they're falling off, especially if you look at all Hollywood people that are on it.
Oh my gosh. Yeah, I wouldn't take it.
So Jim, the healthcare, if you look at XLV, it's been pretty sideways in here. It tried to make new highs recently, but it's still stuck sideways for a while. So I like to see if that begins to break out, then that would be more the half full theory. but that hasn't happened just yet. So I'd like to see that happen first.
You know, there's a big push on these utilities are going to be making all kinds of money because the data centers need so much energy.
Right.
What about an XLU? Is there any value to that at all? I know it's been on the defensive a little bit, but maybe
Ah,
this is the time to take a peek. I don't know.
yeah, not
Look,
with it going down like that. I mean,
it's high, it's hanging on for dear life.
it's got lower to go. It's going to go down to 57.23.
Hmm.
I was a little shocked by that move that they made. They started acting like momentum stocks, and of course now I know why. Once again, I get some news through osmosis.
Yeah.
Jim's got a plethora of good knowledge here, but if you like Sonny says, it looks like it's trying to roll over, or has rolled over.
Mm-hmm.
And we've got a little downside Landry light, and I'm sure the bow ties have probably rolled over on that one. So it's looking a little toppy in here. It'd have to go back up quickly for me to get excited about it.
Yeah, I wouldn't buy. Well, purple's on top on the in the DMA. Price is all below it. It's down to the lower outer band. I wouldn't buy this until it came up above the DMA. So it would have to break out on a closing basis through the DMA. So not
What about the staples? You know, the Procter and Gamble's and all those Coca-Cola's XLP.
oh,
They're probably on the defensive too. XLP.
yeah, I
You got
did.
XLLP.
All right, so I do. XL.
Lose an L.
How's
There
that?
you go. Yeah, they're all the ones that are, you know, dividend oriented and value oriented. It's just too early for those stocks. Similar to being a little early with the Russell, huh?
Yeah. Well, look at that. That's about to come down to this trend line on the XLP. Touch
Hmm.
the trend line and bounce is my guess.
Yeah. That is the basic vibe out there, is that the value and the dividend payers and utilities, it's premature to get too excited about them. There will be a time where there could be a switch out of the high flying techs into something more stable, I guess, if the economy were to slow down a little bit. And we see that unemployment rate jump up. I definitely believe in the charts, though. There's no doubt about that. But I do like to keep a little bit of an idea on current events because, you know, the charts
Mhm.
will ultimately reflect some of this stuff at some point. So, or
That's
if the chart is showing you something, having some concept of why it is going in that direction is not a terrible bit of knowledge. It might give you an idea of how far you might go.
yep.
With regards to the moving averages and stuff, Dave, don't you also believe, or don't put words in your mouth, do you believe that the direction of the average is imperative in that violations of a rising average or violation of a downtrending average are just that violations, and maybe you couldn't react to them or even look at them as opportunities to really take a position in that direction?
Well, if it's a you mind if I share my screen?
Yeah, because I think you show on your screen we saw examples of it.
Yeah, let me see if we can do
You
this real
should
quick.
you should be able to now.
So if you have a pullback to the moving average like this to the EMA, and prior to that you were in an uptrend, I'd consider that a bullish Landry light pullback. Now, I do pay attention to the slope of the moving averages. Keep in mind that an exponential moving average, I learned this from Greg Morris. I was kind of amazed. I know you want to party with me, but I was kind of shocked. But when and Sonny can back me up, when a market closes above an exponential moving average, that average automatically turns up. And when a market closes below it, it automatically turns down. So that slope's going to catch up pretty quick. But I do believe what you're saying about slope. I think slope is important. Pay attention to slope, and that'll help to keep you on the right side of the moving average. And again, unless we get below the 30 EMA and stay there for a while, I wouldn't get too excited in the S&P or any other market for that matter. So far, so good. But you know, routine, as I preach, one day at a time.
Yeah.
Absolutely. Well, we're getting to the top of the hour, so I'm going to start out with Sunny. Sunny, let's get a little bit of idea on what you can do for people when they contact you, and if there's any special offers you want to extend.
Well, I can do some special offers. I can give people a free copy of Sunny Side of the Street on Sunday nights. I can give you a free entry on Wednesday mornings to my live trading room, which meets for an hour every trading morning. Wednesday's the day I accept guest passes. And so far, we're up I think $25,000 since January the 2nd, which is 190%. 8.5 band. So those things are special offers. And let's see, no, my bundle discount's over yesterday, so that won't work. But I have moneymentor.com. I'm a mathematician and programmer. I use TradeStation primarily. I do consulting and mentoring, which is what I love to do. And I love to do Zoom sessions with people. So at the top of my website, you'll see my phone number. It's my personal cell phone, so give me a call. I love to chat with traders. Thank you.
Great. And Dave, again, quick background on what you're going to be able to do for people when they check in, and if you have anything you want to offer out.
Okay, I didn't have a whole lot of time to think about it. I was a last minute guest, but if you want my books for free, you can go to davelandry.com/free-book. There is a dash in there. I don't know if my screen's still sharing, but you can see that. And that'll give you all three of my books for free. It'll give you a feel for what I do. Visit my YouTube channel again. That's at Dave Landry. That'll also is a free way to get into things. I have a monthly members service, and I also have a Facebook group, and we talk about trading in the Facebook group. I get a lot of ideas from my people, which is really nice. And I also have a paid trading service. So the Facebook group and the courses, which unlocks free courses over time, that's $47 a month. The trading service right now is on sale, and that's actual recommendations. So anytime you see me talk about a particular stock, that's one that I have personally recommended and personally taken. So that's on sale right now for $97 a month, and that includes all the members areas and the Facebook access and everything else. But if you just want to get started for free, go to davelandry.com/free-book. Start there, get to know me, and then I would love to have you in the Facebook group and on the trading service and everything else.
Okay, that's great. As far as optionprofessor.com, to quote something that Dave said many years ago, those options have a lot of moving parts, Jim. And they do have a lot of moving parts. So that's why I put together a options masterclass, which is 3 sessions, 2 hours each. So that's 6 hours of explanation of all the different things, options. And we have it available for people under certain circumstances, absolutely free. So if you want to get a little idea, whether you're just starting out a beginner or an advanced guy, that stuff will definitely help you. I put everything I know on it. So that's at optionprofessor.com. And it's called the Options Master Class. So go check that out as well. Thank you, Sonny, very much. And thank you, Dave, very much. We definitely hit a lot of areas here, and I'm sure we help people quite a bit. People should definitely try to get a hold of you guys to get the information. And thanks for being here. So I'm going to send it back over to David. You guys have a great day.
Thank you so much, Jim. Thank you.
All right. Yeah, a ton of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. We're also on Substack now, or you can just go to TimingResearch.com and get access to any of the past shows and events there. Also, be sure to mark your calendar for our next big Synergy Trader series event. And that topic is going to be favorite indicators. So we're going to have 30 presenters over 3 days, all talking about their favorite indicators. And that will be July 23rd, 24th, and 25th. So be sure to join us for that. And while we're live, you can just come to TimingResearch.com and get instant access to the room. So just want to thank my guests again for today. Sonny Harris of moneymentor.com.
Time is 11 o'clock a.m.
Thank you very much.
And Dave Landry of davelandry.com. And the Option Professor of optionprofessor.com. All right. Thanks, everyone.
Thanks,
All right,
David.
David.
Jim, you still there?